Welcome back to the channel, my fellow traders and investors. The last time I made a NEO video, I was in my beautiful home studio, but now unfortunately I am in my university dorm. For those of you who do not know, I'm currently at Queen's University studying at the Smith School of Business, which is Canada's top business school. And so in the last couple of weeks, I've kind of just really been taking my time to figure out my schedule, but now I'm back and we're back again with the upload. So in today's video, I'm going to be breaking down NEO's full technical analysis, price prediction, and my personal strategy of how I plan to trade and profit off the stock at this point, because it could be setting up for an absolutely huge move based off the technicals and along with some of the fundamentals that we're going to be discussing as well. So all I ask in return is that you subscribe so that this video can be pushed out to more neo traders that need a better understanding of what's going on and how to trade it themselves. And if you want to learn technical analysis for yourself and a ton of advanced trading strategies, be sure to go get my new book, A Technical Trader's Handbook, on Amazon, which was the #1 hot release in public finance in the world. So be sure to go get it. And let's jump into the video. Alright, so jumping into the technicals of NEO stock on this 1 month hourly chart, we can see a few things right off the bat. So you can see for basically the last month now, we've just been consolidating in this range from about $36 to $40 a share. Now, if you've been watching my videos, you know that I've been really telling you guys to watch this 39.50 level because it's a very strong level of resistance and to be buying into the breaks above that. Now, last week, we did get a break. We broke above that level and boom, we exploded up all the way to about $41. So congrats for those of you who ended up catching that breakout to the upside. Now, taking a look at what's been happening recently, it almost looks like NEO could be setting up for a really big move, because going to the 6-month 4-hour chart, we can see that it almost looks like we're forming a massive inverse head and shoulders. We have our left shoulder, we have our head, and we're beginning to form our right shoulder. But at the same time, it also almost looks like we're kind of forming a head and shoulders. We have our left shoulder, we have our head, and here's our right shoulder. In fact, even if we take a look at the 1-year daily chart, we can see that today's day was extremely bearish. If I actually scroll in, we can see how we formed this massive gravestone doji. Essentially, we pushed up, but we're forming this candle with a long top wick, suggesting that even though buyers tried to push it up, right, essentially they took profit and sellers sold it back down. And again, we faced immediate resistance at that 39.5 level where we've really been struggling. And overall, it's just been a straight period of consolidation. And one thing I do want to add though is on the daily chart, we have gone a red Mackie line cross above the green signal line. The RSI is in somewhat oversold territory. So right now, that's what I'm saying. There's a lot of possibility that we could either be forming an inverse head and shoulders or a head and shoulders. Now you may be wondering, well, how do I know which one it'll end up being? Well, that's what we're going to be talking about right now in my personal strategy of how to trade this and the key levels I'm going to be watching for. Because with the head and shoulders and inverse head and shoulders, they're basically interchangeable, right? If one doesn't form, the other will most likely form, because they're basically following the similar pattern, right? You have 3 ups, 3 downs, or you end up, forming an extra one and then breaking down to the downside. Now, before I do jump into my strategies, another thing I do want to mention is that we still are forming lower lows and lower highs. You can see we're still at this channel pattern. In fact, we're actually right now at the top diagonal resistance line of this lower low, lower high pattern, right? You can see we came down, we bounced, we pushed up, but again, we're at that top diagonal resistance line, kind of suggesting to me that we are at that critical level. Either right now, this is the point where we break down to the downside and break down all the way to potentially $35 or $30 where we have support at these levels, or this is the time where we break out of this lower low and lower high channel up to the upside and break above this top diagonal resistance line. So I really believe that right now is the point where NEO has approached that critical level. So now jumping into the 1 month hourly chart, let's discuss the key levels to be watching out for. In fact, actually, let's go back to the 6-month 4-hour chart. Alright, so now in the 6-month 4-hour chart, we can see that right now, if this is indeed, a head and shoulders, we got our left shoulder, we have our head, and we have our right shoulder. So what I'll be watching for at this point is a break above 39.5. If we can push back up, break above 39.5, I think at that point that would really confirm that we are going to retest that highs right over here and potentially break out to the upside, where we could then see, a push all the way up here to about, $45 where we had resistance way back over here. The reason being, again, that 39.5 level, we can just see how strong of a resistance it's been. Even though we did initially break it, obviously that negative share offering news caused it that eventual sell-off. But if we do break back above and can break above this 39.5 level, it will show me repeated buyer strength. It's showing me that buyers are essentially not giving up despite the numerous times it's faced resistance up over here. I would essentially say this 39.5 level is probably like our neckline, right? So if we can break above our neckline right over here, boom, we can break out to the upside. And again, we're also breaking above that key resistance level. And overall, even on the 6-month 4-hour chart, you can see how the red MACD line is beginning to cross above the green signal line. The RSI has been forming a bullish divergence despite us making new lows. So all of this is showing that a momentum shift coming in favor of the buyers. Now, another bullish news that might actually help this is optimism from China. Obviously, we heard about their thing going on with Alibaba and Alipay, how they could potentially break up that business. But overall with NIO, we know that the Chinese government is a big advocate for EVs. They funded NIO with over $1 billion of their own money. So I don't really see any major regulation, particularly against NIO, and that's why NIO stock has comparatively not lost that much value compared to, let's say, an Alibaba, a Baidu, or a JD, right? So as we can see, essentially one of the ministers said that they could be a sector consolidation. The reason being is that there's so many new EV businesses growing up in China, and there are a bunch of licenses being thrown around, and there's a lot of competition at this point, and there's not much room for growth if this trend continues. So overall, what this will do for NIO, and especially the big companies, is it'll give them an advantage, because essentially the government will be limiting the amount of new companies that could be formed, which means that NIO could eventually even pick up some new companies, purchase their technology, leech off some of their team members, and essentially just continue growing their business and asserting a dominance. So now that's the fundamentals and the technicals if we break out to the upside. But then there's the bearish case. But as a trader, you should be able to trade both sides regardless. That's how you profit in the stock market. Otherwise, if you're only profiting when things go up, when things go down, you're just going to continue to lose money. So you have to be able to trade and be able to identify the key levels regardless. But before I do jump into that, if you haven't already, be sure to go get my new book, A Technical Trader's Handbook, on Amazon. If you want to learn technical analysis for yourself to up your trading level and really become more profitable. Now, taking a look at the bearish scenario, in my opinion, if we do break below this level here at approximately 37.78, then I think we are indeed forming a head and shoulders, right? Before we were forming an inverse head and shoulders, now I think we are forming a head and shoulders if we break below this 37.5 level. The reason being is that this is a key level of support, right? Support, even more so than I would say this level down here at about 36.5. I mean, sure, you could also say 36.5 is a key level of support, but you can see we've really consolidated at this 37.5 level for quite a while now. This is like that key consolidation level, and once we break past those levels, obviously buyer stop losses are triggered here, and boom, we see a big spike to the downside. So if you do break 37.5, I do expect this to be a head and shoulders, where we do then continue even lower, potentially all the way down here to about $35 a share, where we had a previous level of support right over here. In fact, scrolling back even more, then the next level of key support will probably be down here, at 35, where we had support over here, and below that, then obviously all the way down here at $30, where we had a big swing low right over here. So those are the key levels to watch and the key breaks to be watching out for. Obviously, right now, it's kind of uncertain. Are we forming head and shoulders, inverse head and shoulders? Because they're both really interchangeable, as I mentioned. And obviously, guys, this is not financial advice. Be sure to do your own due diligence and your own research. But those are the key levels to be watching out for. So with that being said, guys, that's the video. And if you enjoyed this in-depth technical breakdown, be sure to like and subscribe. And go get my new book, A Technical Trader's Handbook, on Amazon, which covers a ton of advanced trading strategies that have helped me help you guys catch over 100% gains simply based off the technicals. So be sure to go get it. And I'll see you guys in the next one.